Hi, my name is Bob Gersh with East Coast Capital, and the topic of today is reserves. Now, what does that mean? Typically, that means funds that are immediately available that you can just write a check, or you can transfer from a savings account into your checking account, or they may be a money market account, but if it is a money market account, want to be cautious because of the fact that typically they don't have any insurance on the funds, whereas in the bank account, savings account, checking account, etc., there is a level of reserves as far as level of insurance on those reserves. So what we're thinking about is that there's a lot of folks who have payments that come each month, and it's enough to pay your bills for that month. But what if, for some reason, the money didn't come in? Now, this could be because there's a banking holiday of some nature, or there's an issue with getting things transferred from one account to another, or that checks are in the mail and literally is in the mail but hasn't reached you. Lots of reasons why you could be delayed. Now, you'd say, well, realistically speaking, what's the odds of, a problem with moving money in bank accounts, et cetera, and handling that? Well, what if there was a major storm? I live in Central Florida, and there are times of the year where you could have a major storm. Some other folks, throughout the country have issues regarding weather-related situations. Well, that you could find yourself without being able to get out and get to a mailbox, or even there to get to a bank. And or what if the electricity was out and it was out at your local friendly ATM machine and or bank? Said, well, I can bank over the internet. Well, we're making an assumption here the internet's working. I've woken up mornings and internet, the cable, was not working. And for a number of hours, it wasn't working. Well, and there was no storm or other issue, but it can happen. So there are a lot of scenarios that we can come up with which are not unrealistic, where you don't have access to excess funds and or, you have an issue where getting hold of money may not be so easy, even if there's money that typically would come to you. So those are reasons why you want to have reserves set up and their availability being very easy. So that's part of it. The other part of it is that for some reason, if you're relying on a certain kind of income and that income doesn't come in because that's related to a job, maybe it's a part-time job, and for some reason, you're laid off on that, or other issues occur, and or you have some extraordinary type bills, which aren't regular bills, regarding the house, regarding a car, medical related, and again, to be able to have those resources to be able to pay those medical bills, housing bills, car bills, etc. It's a case of having adequate funds to do that. Now, we're not talking about putting aside huge monies, but for some folks, there's nothing put aside or just minimal. So as a rule of thumb, we're looking at having between 6 months and a year minimum worth of reserves. Now, as a lender, two reactions to all that. One is that depending on what your finances are, considering we have such low interest rates today, that if you have equity in your property, now may be the perfect time before the perfect storm, if we're not already in it, to be able to do a refinance, to be able to set up those reserves, to be able to be in a position that you're able to at least know you have the backup, and the cost of setting that up, i.e. the interest cost if you're borrowing the funds and then placing it in, since we don't get very high yield, if any, on those short-term savings, money markets, or bank accounts, interest bank accounts, etc. You're not getting much of a yield, but your cost of funds is very, very low. So to have that safety net with the 6 months to a year, the cost of doing that, this may be the perfect time to evaluate that and do that. So even if things in and out seem to be working each month, you have those extra funds. Now, if you do, congratulations. Significant part of the population does not, and therefore they're at risk. And, it's like buying insurance. This can be done in a very affordable situation. It can be done very nicely and easily, and, without lots of extra expenses, just a matter of a little time, paperwork, and, those expenses can be built into the transaction. But we get you the cash to put aside, and it's not the worst thing in the world. And then you may look at your other cash situations beyond that, once you have that reserve in place, and say, what do I have in, a higher yield or cost credit card, where it's costing you money for that credit card beyond, the current rates, but high rates on some of these credit cards. You may look at, again, moving some of the funds that you receive at a very, very, very low rate on a mortgage, use that to pay off some of those high cost credit cards. Not to just run them back up, but basically to redeploy your funds, save you money over the short run and long run. Now, the other part as a lender is that we do look at those reserves to the extent they're there, and or they will be there. And those are important elements of determining you're being able to qualify for a reverse mortgage, a regular mortgage, 30-year mortgage, 15, whatever you're looking at. All those kind of mortgages, we do look at reserves, because that's definitely, if you have the funds to pay your mortgage, irrespective of other issues, you may have investments, and you just never know how they're going to do over the next 6 months or a year. And you don't want to be selling investments when the market is going down, or at least you try not to do that. But if you have the reserves in place, then you don't have to touch those during a time period where there's volatility going the negative way. So reserves are looked at by the lender very favorably. So multiple reasons why, if you are looking and have established those reserves, why lenders will look at you better, as well as your overall picture, becomes better, safer. And so we strongly suggest we have the discussion about either putting in place reserves or looking at your reserves. I can also say that, honestly, long run, it's nice if you have way more reserves, but suggestion is, and we're not financial planners, but that you do bring a financial planner in and discuss what your alternatives are for maybe excess reserves, to make sure you are properly deploy them to maximize your yield on them in the long run, without taking any excess risk. There may be things you could be doing on that. So, that's going beyond the reserves into what I'll call your investment portfolio. So that's what we suggest. And again, it's all about reserves. Something, if you're sitting there in your home at this point, and you're getting your bank statement each month, and you're paying your bills over the month and seeing what's going on, and now it's the first of the month, where is your money coming, and what if there was an issue where you couldn't get to the bank, or the money wasn't coming from the bank at the moment? Do you have other funds available to pay those bills on a timely basis? So something to think about. If we can be of any help, assistance, with looking at that whole picture, feel free to call us. It's Bob Gersh with East Coast Capital, and my number again, 352-561-3096. I hope you're well. I hope your family's okay, and I hope you're having a good week. And if we can be of any assistance regarding reserves or any other related topic, feel free to give me a call, contact us. And again, we hope to see you around the closing table sometime soon. And again, it's Bob Gersh with East Coast Capital, 352-561-3096. And have a fabulous rest of the week.